Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar attempted to take on that challenge at 74.55.65 with the 60-day moving average also seen at 74.60. From the challenge to the upside, the market plunges and now posts a bearish outside range day, which awaits confirmation. From the challenge to the upside of the cap of 74.55.65 turns the attention now towards the support at 73.45, with scope of even falling lower towards the objective of 72.55.65, which I've been holding now for a little while. From the technical implications, also support and move down. You can see from the RSI, stochastic and the MACD that the market is very much in way of moving lower, and therefore I do expect to see the downside contest eventually be achieved. Overnight, the dollar index posted a very strong gain and a fresh new yearly high of 95.47. Now, some of you may not know or may know is the fact that the US dollar index, which measures the greenback strength to a traded weighted basket of 6 major currencies, weighs the euro at 57.6. Now, with the weakness coming back into the euro due to the dollar strength, now puts the downside at 114.85 vulnerable. A break beneath there would give further scope to the downside to 112.85. It is viewed from a technical point that we should eventually see this move, and therefore, with the break sustaining above 95.40 for the dollar index, could see a rally on towards 96 to 97 as a potential target. Later today, we do have the inflationary data, and the market is looking for a forecast of 3%, while core inflation is expected to hold at 2.3%, above the Fed 2% objective. It is viewed any rallies now would see the euro around 116.15 as a sell. Well, the dollar yen is a little bit mixed, but still holding above the 110.75 level, and with the dollar surging, should put further emphasis to the upside, and I do expect to see the market claim the region of 111.5. Do keep your stop losses tight though, because a break beneath 110.75 could see a fall towards 110.15.25. So if you are trading from alongside, do keep it very close in case of the break. Because of the stochastic also breaking down with the RSI and the MACD, does leave the market a little bit vulnerable to the downside. Well, the British pound week isn't over yet as the market free falls and further towards the 128 level. Since late July, the market has fallen from 132.05.20 to the lows of 128.17 this morning, and it's seen that further weakness could be coming in store and look towards the region of 126. What has put the pound in pretty much a very vulnerable state to the bearish case is that the Brexit may be heading for either a no Brexit deal or a hard landing. UK Trade Liam Fox said that recently that there's no chance of a negotiation between Brussels and London may be achieved. Therefore, we could see a very hard landing. With Bank of England Governor Mark Carney also warned that a no deal could put the UK in a highly uncomfortable situation. With the pattern still from the weekly chart falling, we could be looking at 126. The gold outlook, as you can see here on the dailies, is showing bullish divergence. I think the market will eventually stage a rally on towards the highs around 1,240.45. Any dips to be shallow, and at this stage seems to be comfortably holding above the 1,200 mark, with minor support at 08 and firmer support at 04. Wrapping up with oil, well, the market hasn't bounced off this $66 level, and which could, if breached, trigger further fall towards a region of $62 a barrel. I'm in favour of this move, and any rallies should be contained from around 67.20.35. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.